In this video, we are unveiling the 6 best Vanguard ETFs that not only have stood the test of time, but also have shown impressive performances over the past 1 and 5 years. You might ask now, why Vanguard? Vanguard has a stellar reputation for offering some of the lowest cost and most accessible ETFs in the market. They're a preferred choice for long-term investors due to their wide range of options, covering various sectors and asset classes. With that understanding, let's dive into the 6 best Vanguard ETFs to buy and hold forever. First on our list is the Vanguard Total Stock Market ETF, ticker symbol VTI, a cornerstone for diversified investment portfolios. Offering expansive coverage of the U.S. equity market, VTI includes small, mid, and large cap stocks across various sectors, making it a microcosm of the entire U.S. economy. VTI mirrors the CRSP US Total Market Index, giving investors a piece of over 3,500 stocks, thereby encapsulating the comprehensive US stock market in one ETF. Remarkably efficient, VTI boasts an expense ratio of just 0.03%, making it a highly cost-effective choice for investors seeking broad market exposure. 1-year performance, VTI has delivered a 26% return over the past year, demonstrating its resilience and growth potential in varying market conditions. 5-year performance, VTI has seen a commendable 74% increase over the last 5 years, underscoring its solid long-term investment appeal. This blend of broad diversification, low cost, and consistent short and long-term performance solidifies VTI's position as a prime candidate for your buy and hold forever list. Its track record speaks to the strength of the U.S. stock market and the myriad of companies it comprises. Continuing our exploration of Vanguard's finest, at number 2 we have the Vanguard S&P 500 ETF, known by its ticker symbol VOO. This ETF is the gateway to the heart of the U.S. economy, offering direct exposure to the 500 largest companies in the U.S. stock market. It's a favorite among investors aiming to mirror the performance of the American corporate sector. VOO aims to track the S&P 500 index, a benchmark of American economic strength and the corporate health of its most prominent players. From technology giants to industry behemoths, VOO puts the top tier of the U.S. economy into our portfolio. With an expense ratio of only 0.03%, VOO stands out as a cost-efficient way to gain exposure to the cream of U.S. corporations, ensuring most of your investment goes towards your financial growth. Performance overview. 1-year performance, VOO has provided investors with a return of 36% over the past year, showcasing its ability to capture the growth of America's largest companies. 5-year performance. Looking at the longer horizon, VOO has achieved a return of 95%, reflecting the enduring value and growth potential of investing in top U.S. companies. Why it's a good hold. VOO's targeted exposure to the S&P 500 makes it a must-have for investors seeking growth and stability in the heart of the American economy. Its historical performance demonstrates the resilience and growth potential of the U.S.'s largest companies, making VOO an essential component of any long-term investment strategy. Next up at number 3, we have the Vanguard Value ETF, ticker symbol VTV. This ETF is tailored for investors looking to tap into the potential of value stocks within the U.S. market. VTV focuses on companies considered undervalued relative to their fundamentals, offering a promising avenue for growth and stability. VTV aims to track the CRSP US Large Cap Value Index, which includes firms that exhibit value characteristics based on book-to-price ratio, earnings-to-price ratio, and sales-to-price ratio. It's a strategy that targets companies with solid fundamentals that the market may overlook. With an expense ratio of only 0.04%, VTV offers an economical way to invest in a curated selection of value stocks, maximizing your investment potential with minimal costs. Performance overview. 1-year performance, demonstrating resilience and potential. VTV has posted a return of 11% over the past year, highlighting the appeal of value investing in uncertain markets. 5-year performance. Over 5 years, VTV has shown a steady increase with a return of 44%, proving the long-term viability of investing in undervalued companies. Why it's a good hold. VTV's focus on value-added stocks make it a strategic choice for investors seeking to capitalize on market inefficiencies. Its performance underscores the potential for significant returns from companies with solid fundamentals, but undervalued stock prices, making it a compelling option for your long-term investment portfolio. At number 4, let's talk about the Vanguard High Dividend Yield ETF, known by its ticker symbol VYM. This ETF appeals to those seeking income and growth, focusing on companies with a high dividend yield. It's desirable for investors looking for steady income streams from their investments. VYM tracks the FTSE High Dividend Yield Index, selecting companies based on dividend yield. This approach prioritizes firms that pay dividends and do so generously, offering a dual benefit of income and potential for capital appreciation. Sporting an expense ratio of just 0.06%, VYM is an efficient way to gain access to a portfolio of high dividend yielding stocks, optimizing the income potential of your investments. Performance overview. 1-year performance. With a 7.7% return over the past year, VYM has proven its worth by providing investors with growth and income, a testament to the enduring value of dividend investing. VYM has secured a return of 34% over the last 5 years, showcasing the long-term benefits of incorporating high dividend stocks into your portfolio. Why it's a good hold? VYM's emphasis on high dividend yields offers a compelling blend of income generation and investment growth. It's an ideal choice for those looking to bolster their portfolio's income while still participating in the equity market's growth potential, making it an indispensable part of a diversifiable long-term investment strategy. Number 5 on our list is the Vanguard Total International Stock ETF, with the VXUS ticker. This ETF offers investors a passport to the global economy, including the United States, providing exposure to many international stocks. It's an excellent choice for diversifying their portfolio beyond U.S. borders. VXUS tracks the FTSE Global All Cap ex-US Index, which includes over 6,000 stocks in more than 45 countries, from developed markets like Europe and Japan to emerging markets like China and India. This wide range of exposure ensures investors can benefit from global growth opportunities. The expense ratio for VXUS is just 0.08%. Making it a cost-effective way to gain comprehensive international market exposure, enhancing your portfolio's diversification without significantly increasing costs. Performance overview. 1-year performance. VXUS has achieved a return of 9.3% over the past year, reflecting the potential upsides and diversity of global markets. Over the 5 years, VXUS has returned 14%, demonstrating the value of international diversification in achieving long-term investment growth. Why it's a good hold? Investing in VXUS means embracing the growth potential of international markets, offering a counterbalance to your US-centric investments. Its broad exposure helps mitigate risks associated with any country or region, making it a strategic addition to any long-term investment portfolio. Our list at number 6 is the Vanguard Growth ETF, ticker symbol VUG. This ETF is for those looking to capitalize on the growth potential of U.S. companies. VUG focuses on firms expected to grow at an above-average rate compared to the market, making it an enticing option for growth-oriented investors. VUG tracks the CRSP US Large Cap Growth Index, which selects companies that exhibit growth characteristics based on future earnings growth, investment to assets ratio, and historical sales growth. It includes leading technology firms, innovative healthcare companies, and other growth sectors, representing the forefront of the U.S. economy. The expense ratio of VUG is just 0.04%, offering an economical way to invest in high-growth U.S. companies. This low cost ensures more of your investment is allocated towards the growth potential of these companies. Performance overview. 1-year performance. VUG has delivered a return of 46% over the past year, showcasing its ability to capture the dynamic growth of the U.S. market's most innovative sectors. Over the past 5 years, VUG has achieved a return of 119%, demonstrating the long-term benefits of investing in growth-oriented companies. Why it's a good hold? VUG's focus on growth companies makes it a vital component of any investment strategy looking to harness the potential of the U.S. economy's most dynamic sectors. Its performance highlights the advantages of growth investing, with the ETF's selection of companies leading the charge in innovation and market expansion. VUG is an indispensable choice for those aiming to build a portfolio that not only grows but thrives over time. And there you have it, folks, our deep dive into the 6 best Vanguard ETFs to buy and hold forever. Each of these ETFs offers unique advantages, whether seeking broad market exposure, international diversification, or specialized growth or value strategies. Remember, the suitable investment for your portfolio depends on your individual financial goals, risk tolerance, and investment horizon. Consider consulting with a financial advisor to tailor your investment strategy to your needs. If you found value in our exploration today, please hit that like button and subscribe to our channel for more insightful financial content. Your support helps us bring more tips, strategies, and guides to navigating the investment world. Thank you for watching, and here's to your financial success.